My new CEO looked me dead in the eye across that conference table and said, "Frank, let's be honest with each other. You're a legacy hire, and legacy hires don't fit the direction we're taking this company." He said it like he was doing me a favor, like he was letting me down easy instead of twisting a knife. His name was Elliott, 34 years old, MBA from Wharton, never filed a tax return that had more than 2 income sources in his life. He'd been brought in by the board 8 months earlier to modernize the operation, which turned out to mean firing anyone who remembered how things worked before the software did everything automatically. I'd been with Donnelly Financial Partners for 19 years. 19 years of 60-hour weeks, of flying to client meetings in cities I couldn't pick out on a map, of knowing every account, every discrepancy, every corner of that company's books the way a surgeon knows anatomy. I was their senior compliance director. I built the internal audit framework from scratch back when the firm had 11 employees and a shared printer that jammed every Tuesday, but Elliott didn't see any of that. Elliott saw a 53-year-old man who asked too many questions in meetings and made the junior analysts nervous by actually reading the reports they submitted. He slid a folder across the table to me that afternoon. "We're restructuring the compliance function," he said. "Centralizing it through the new fintech platform. Your role is being eliminated. We'd like to offer you a severance package, of course. Very generous. 30 days to consider." I looked at the folder. I didn't open it. "And if I don't take the package?" I asked. He smiled the way people smile when they already know the answer to the question they're about to answer. Then we have a longer, more complicated conversation, one that nobody wants to have. I picked up the folder, tucked it under my arm, and stood up from the table. "Thank you for being direct," I said. I walked back to my office, closed the door behind me, and sat down in my chair. I didn't panic. I didn't call my wife. I just sat there for a moment, very still, and I thought about the last 4 months. Because here's the thing Elliott didn't know. He didn't know what I'd been looking at. It had started in January, almost by accident. I was reconciling quarterly reports, something I'd done so many times it was practically involuntary, when I noticed a pattern in the way certain client fee structures were being categorized. Not illegal on its face, but unusual. The kind of unusual that makes a compliance officer's neck hair stand up at 3 in the morning. I pulled more records, then more. I stayed late 2 nights in a row, cross-referencing account classifications against the firm's fiduciary disclosures to clients. What I found was not good. Donnelly Financial Partners had been systematically misclassifying certain advisory fee arrangements in their SEC filings for 3 years running. They were billing clients under a fee structure that required specific disclosures under Investment Advisors Act regulations, disclosures that were either buried in fine print or missing entirely. The amounts per client weren't enormous, but across the full book of business, we were talking about a material misrepresentation to both clients and regulators, the kind that, if the SEC's Office of Compliance Inspections ever ran a routine examination, would result in more than a strongly worded letter. I documented everything: dates, account numbers, filing references, the specific regulatory provisions involved. I saved nothing on company servers. Everything went to a personal encrypted drive I kept in my desk drawer at home. I wasn't planning to do anything with it. I want to be clear about that. I wasn't building a case against my employer. I was a compliance officer. Documenting anomalies was what I did. It was muscle memory. It was 19 years of instinct that I couldn't turn off even when maybe I should have. I brought the discrepancy to Elliott's attention in February in writing, through the proper internal channel. I flagged it as a potential regulatory exposure and recommended an internal review before the next SEC reporting cycle. He never responded. His assistant sent me an email 3 days later saying Elliott had reviewed my memo and determined that the matters I'd raised had already been addressed through the new fintech compliance platform and required no further action. I saved that email. I saved a copy of my original memo. I saved the timestamp logs showing when each document was created and transmitted. I kept doing my job. I kept showing up. I kept my head down and waited to see what they would do next. What they did next was invite me to that conference room and slide a folder across the table. That evening, I called my brother-in-law. He's an attorney, not a securities lawyer. He does real estate mostly, but he's smart and he knows people. I told him what I had. There was a long pause on the other end of the line. "Frank," he said slowly, "you need to talk to a whistleblower attorney. Not tomorrow, tonight, if you can manage it." "I haven't decided to do anything yet," I said. "I understand that. But you need to know your options before you decide. Because what you're describing isn't a minor HR situation. If what you're saying is accurate, this potentially falls under the SEC whistleblower program. And that changes everything." I'd heard of the program in a general way. Every compliance professional has. The Dodd-Frank Act created it back in 2010. If you report original information about securities violations to the SEC and the agency takes enforcement action resulting in sanctions over $1 million, you're eligible for a financial award. 10 to 30% of the sanctions collected. I hadn't thought about any of that, genuinely. My concern had been the regulatory exposure to the firm, and then my own employment situation. But my brother-in-law's words settled into me slowly, the way cold water does when you step into it. "Call the attorney," he said again. "At least hear what she says." I called her the next morning. Her name was Patricia, and she had spent 15 years as an SEC enforcement attorney before going into private practice. She made me bring every piece of documentation I had to her office. She spent 3 hours reviewing it while I sat across from her desk drinking bad coffee and trying not to look like I was about to be sick. When she finally looked up, she took her reading glasses off and set them on the desk. "This is real," she said. "This is documented, it's specific, and it covers a period long enough to establish a pattern rather than an isolated error. You have your internal reporting memo with the timestamp. You have their non-response. That matters enormously, because it establishes that the firm was made aware of the issue and chose not to address it." "What does that mean practically?" I asked. "It means you have the foundation of a credible whistleblower submission to the SEC. Whether you file is entirely your decision, and there are real considerations on both sides. But if you do file and if the SEC investigates and takes action, which I think is a genuine possibility here, you could be looking at a very significant financial outcome." I asked her what very significant meant in concrete terms. She put her glasses back on and showed me the numbers. I drove home slowly that night. My wife was in the kitchen when I walked in, and she looked at my face and immediately turned off the stove and sat down at the table. She knew something had happened. 19 years of marriage. She can read me the way I read a balance sheet. I sat down across from her and told her everything. All of it. The discrepancies, the documentation, the memo, Elliott's dismissal, the severance folder, Patricia's assessment. She listened without interrupting. When I finished, she was quiet for a moment. "What do you want to do?" she asked. "I want to know what the right thing to do is," I said. She reached across the table and put her hand over mine. "You already know the answer to that. You've known it since January." She wasn't wrong. I had known. I'd been circling it for months, finding reasons to wait, reasons to give the firm another chance to self-correct, reasons to believe Elliott would eventually call me back into that conference room and apologize for his response and take the issue seriously. He hadn't, and he wasn't going to. He'd eliminated my position instead. I did not sign the severance agreement. Patricia advised me not to, at least not yet, because signing could complicate certain aspects of what came next. Elliott's assistant followed up after 2 weeks with a reminder about the 30-day window. I replied that I was still reviewing my options. I could almost hear Elliott's impatience through the email. Patricia filed our SEC whistleblower submission in early April, 61 pages, supporting documentation attached. We submitted through the official SEC tips, complaints, and referrals system, and Patricia flagged it for the Office of the Whistleblower specifically. She'd represented clients through this process before. She knew which doors to knock on and how hard. I went back to work. I kept going in every day, doing my job, responding to emails, attending meetings. Elliott ignored me with the elaborate casualness of someone trying very hard to ignore someone. The junior analysts looked at me the way people look at a building they've heard might be condemned, not quite sure when it's going to come down, not wanting to be too close when it does. 6 weeks passed. 8 weeks. I was beginning to wonder whether we'd misjudged the whole thing. Then, on a Tuesday morning in June, 2 investigators from the SEC's Chicago regional office showed up at Donnelly Financial Partners and asked to speak with senior management. I was in my office when it happened. I watched through the glass wall as the receptionist made a phone call, and then Elliott's assistant walked quickly toward his office, and then Elliott emerged from his office with the expression of a man who has just discovered the check engine light is not, in fact, a minor issue. He didn't look at my office. He was too focused on walking toward the conference room with the 2 people he'd never expected to see. I turned back to my computer and kept working. The thing about doing 19 years of compliance work is that you understand at a cellular level how these examinations unfold. You know the questions they ask. You know what they're looking for and how long it takes to find it. You know that once the SEC begins a formal examination, the legal bills start accumulating faster than most people expect, and the instinct of every executive in the building is to immediately begin telling slightly different versions of events, which almost always makes things worse. I knew what was coming. I just didn't say anything about it to anyone. Over the next 6 weeks, Donnelly Financial Partners went through what I can only describe as a slow institutional unraveling. 3 outside law firms were brought in. Emails from 2 years back were being reviewed by attorneys billing $500 an hour. The fintech platform that had supposedly rendered my role unnecessary turned out to have compliance monitoring capabilities that, upon examination, were either not configured correctly or not configured at all. Elliott had apparently taken the vendor's sales presentation at face value without having anyone verify whether the system was actually doing what it claimed to do, which, as it happened, was the core of our problem. The misclassifications I'd flagged in February had continued throughout the period when the platform was supposedly managing them automatically. Elliott announced in July that he was leaving the firm to pursue other opportunities. The announcement was made on a Thursday afternoon, 15 minutes before the market closed. Nobody on the floor looked surprised. A few people looked relieved. The board brought in an interim CEO, a woman named Catherine, who had spent 20 years in regulatory compliance at a competing firm and had a reputation for being extremely thorough and extremely humorless about documentation gaps. Her first week, she walked the floor and had one-on-one meetings with every department head. When she came to my office, she sat down, looked at my filing system, and said, "Tell me what you know." I spent 2 hours walking her through everything. She took notes by hand, which I respected. At the end, she closed her notebook and said, "Your position was eliminated." "It was," I said. "Effective when? I was given a 30-day window to accept severance. I didn't sign." She looked at me steadily for a moment. "So you're still employed?" "Apparently so." Something shifted in her expression. Not quite a smile. "I'd like you to stay involved in what we're working through with the regulators if you're willing." "I'm willing," I said. The SEC enforcement process moves slowly. I want to be honest about that. It's not a television drama where everything resolves in 48 hours. We filed in April. The formal investigation continued through the fall. There were depositions. There were document productions. There were moments when Patricia would call me and give me updates, and I would sit in my car in the parking garage after, because I needed a minute before I walked back into the office. My wife kept asking me how I was holding up. I kept telling her I was fine, and she kept seeing through it, and eventually I stopped pretending and just told her the truth, which was that it was exhausting in a way I hadn't fully anticipated. Not the work itself, but the weight of it. The The knowledge that what I'd set in motion had real consequences for real people, some of whom hadn't been involved in any of the decisions that created this situation. That's not something the compensation makes easier to carry. I want to say that clearly. The SEC issued its final enforcement order in February of the following year. Donnelly Financial Partners agreed to a cease and desist order, paid disgorgement and prejudgment interest, and agreed to a civil penalty. The total sanctions were substantial, enough to clear the jurisdictional threshold for whistleblower awards by a significant margin. Patricia called me when the order became public. "It's done," she said. I was sitting at my desk at the office, the same desk I'd been sitting at for 19 years. Outside my window, it was grey and cold, the kind of February afternoon that feels like it's been going on for 3 weeks. "Okay," I said. I didn't know what else to say in that moment. The award determination will take some time. Could be several months. But Frank, the underlying numbers here are strong. I want you to be realistic about what that might mean. I thanked her and hung up the phone. I looked out at the grey sky for a long time. The SEC Whistleblower Award determination came 5 months later. I won't give you the exact figure because I have attorneys who would prefer I keep that private, and I respect that. What I will tell you is that it was more than I had made in any 5-year period of my career, more than my wife and I had saved in 19 years of careful, unremarkable financial planning. My wife cried, not sad crying, the other kind. I sat at the kitchen table and looked at the letter from the SEC office of the whistleblower, and I thought about that February afternoon when I'd first noticed the pattern in the quarterly reports. I thought about the nights I'd spent cross-referencing records after my wife had gone to bed, the encrypted drive I'd carried home in my laptop bag, the memo I'd submitted through proper channels and never heard back about. I thought about Elliott sliding that folder across the conference table. I thought about how certain he had looked in that moment, how settled, how absolutely sure he was of how this would go. Here's what I've come to understand, and I mean this without any satisfaction in my voice when I say it. The people who are most confident that they've outmaneuvered you are almost always the people who don't know what you already have in your desk drawer. I was a compliance officer for 19 years. Documenting things was not a strategy I invented to protect myself. It was just what I did every day because it was the right thing to do. What happened next was simply what happens when you spend 19 years doing the right thing and someone finally makes the mistake of forcing the issue. I still work in financial compliance. Different firm now, smaller, the kind where the CEO knows everyone's name and the quarterly reports get read by actual human beings. I took a pay cut to get there. I didn't mind. Some mornings I drive past the building where Donnelly Financial Partners used to have their offices. The sign is different now. Different company, different logo on the door. I don't feel triumphant when I pass it. I feel something quieter than that, something that's harder to name. I documented the process. I had time to wait for the results. That was all I ever did. And sometimes, if you do those two things right, the rest of it takes care of itself. There's a version of this story where I sign the severance agreement, where I take the folder Elliott slid across that table, flip to the signature line, and write my name because I'm 53 years old and tired, and the number they were offering wasn't nothing. I've thought about that version a lot. It would have been easier, at least for a few months, and then it would have been much harder for the rest of my life. What I keep coming back to is this: I didn't document those discrepancies because I was building a case. I documented them because that's what you do when you've spent 19 years caring about whether the numbers are honest. That instinct, the one that made me stay late cross-referencing account classifications when I could have gone home and watched television, that wasn't strategy. It was just who I was. And I think that matters, because if I'd been doing it for leverage, it would have felt different. It would have felt like a weapon I was holding. Instead, it just felt like my job. Elliott understood power in one language: position. He had the title, he had the board's confidence, he had the ability to restructure a department and eliminate a role with a folder and a 30-day window. What he didn't understand, what people like him almost never understand, is that authority borrowed from a title is temporary. It lasts exactly as long as the situation cooperates. The moment the situation changes, there's nothing underneath it. What lasts is the kind of authority you build quietly, over years, by knowing more than everyone else in the room and being honest about what you know, even when nobody's asking you to be. That's not a moral lecture. That's just what I observed to be true in my own life, watching it play out in real time. I won't pretend the process was easy. There were months where I drove home in the dark, wondering whether we'd misjudged everything, whether the SEC would look at our submission and file it away, and nothing would happen, and I'd have spent a year of my life in suspended professional animation for nothing. Patricia kept me grounded. My wife kept me grounded more. There's a kind of steadiness that comes from having someone at home who looks at you and doesn't need you to be winning in order to believe in you. I leaned on that more than I expected to. What I understand now on the other side of it is that the outcome required all three things working together. It required being right about the facts, doing the intellectual work of actually understanding what the regulations required, and documenting the gap with enough precision that a former SEC enforcement attorney could look at it and say, without hesitation, "This is real." It required being honest enough to report it internally first, to give the firm the chance to correct itself, even knowing they might not. And it required the patience to keep showing up every day for months while the process moved at its own pace, to not flinch when Elliott ignored me or when the investigation stretched longer than I'd expected. Take any one of those away and it doesn't work. The facts without the honesty, and you're building a case for the wrong reasons, and it shows. The honesty without the patience, and you fold before the outcome arrives. The patience without the facts, and you're just waiting for something that was never coming. I documented the process. I had time to wait for the results. That's the whole story, really. Everything else was just what happened while I was doing those two things.